Hey, what's up, my friend? So, welcome back to this week's market analysis, right? I believe I've said this, regularly, and I want to say it once again, right? A big thank you, right, for watching these weekly videos, and for those of you who are new, right? I believe quite a number of traders from the Philippines, right, are relatively new to these videos. I want to say, thank you as well, right, for all your support, new and old traders, because I wouldn't have gotten this far, right, since 2013 to right now without you. So, thank you for your support. I really appreciate it. Okay, so with that said, the first thing that I want to cover in this week's video is number one, talking about expectations, right? Because I've received a comment a couple of months back, right, saying that certain forex traders, they make about 40% in less than 3 months and stuff like that. So I want to share with you my thought on it, and also we'll look at the markets, right? The best setups that I'm looking at this week, namely dollar yen, euro, Aussie, and natural gas. All right, I know it's a market that not many of you trade, but it's worth looking at because there could be a potential breakdown on that market. So all this and more in today's video. I'll see you there. So before I get to this week's market analysis, I want to share with you a comment that I received during the enrollment of the trend following mentorship program. So for those of you who were invited to it, right, you know that I said something along the lines of, trend following, can help you achieve anywhere from 10% to 20% a year on average. And for those of you who want to push things further with more aggressive risk management, right, you can even do 40% a year. But of course, at the expense of a deeper drawdown. And then I received this comment, right, this statement, right? Up to 40% a year in Forex, many people do that in less than 3 months. So now, here's the thing, right? It's easy to push out numbers and make claims and stuff like that. But if you want to put these numbers to the test, right, what does it reveal? So let me share with you. So let's use this simple a compound interest calculator. Let's say you put $5,000 into your trading account and you're not putting any more funds over time. Okay, interest rate, how much returns are you looking at? So according to that statement, okay, 40% in less than 3 months. So let's make it 40% in 3 months. So which is about 80% every semi-annually, means every 6 months, right? So if you calculate, okay, sorry, I missed this out, the length of time. Let's put 30 years, right? Since I think most of you would be trading, for the next 30 years. Okay, you can see that after 30 years, you would have, I'm sure you're dumbfounded, right? This number here is not billion, it is trillion. $2.9 trillion, right? Let me just get this right. This will be a million. This over here will be a billion. And this over here is 2,900 billion, which is $2.9 trillion. After 30 years, okay, compounding at 80% every 6 months, you would be at $2.9 trillion. So now let's see whether this makes sense. The richest man in the world right now, I believe it's Jeff Bezos, right? If I just click on this, right, you would see. Okay. So yep, you can see Jeff Bezos about 90 billion, Bill Gates at about 90 billion as well. Warren Buffett, right? He's pretty much close to what we do, although it's in the investing niche, 74.3 billion. So nowhere near the 2.9 trillion dollars that that is projected over here. So why is that? Right? I think if you look at the Forbes, the 10 richest people list over here, there is not even a forex trader over here. So what's wrong, right? Clearly something is amiss, right? It's either the claims don't work, or number two, right, FX traders are damn good at hiding the money that Forbes can't even tell how rich they are. So use some logic and common sense. Okay, I don't deny, right, a trader can make 40% in 3 months, but can you make 40% consistently over the next 20, 30, 40, 50 years? That is the question. Because why would you want to make 40% in 3 months and then lose everything in the remaining 9 months of the year? Might as well you go to the casino, right? You still get free drinks, you can look at babes and stuff like that. So really, right, consistently over time, that's the name of the game. We're not trying to make a quick buck down here. We are trying to grow our wealth from trading consistently over time. And as you can see, right, the numbers just don't make sense. $2.9 trillion in the next 30 years, right? You are 3 times, you're more than 300 times, right, richer than the current richest man in the world right now. Doesn't make sense, right? So, whenever you come across promises, gimmicks and stuff like that, just plug in the numbers, right, to any compound interest calculator and ask yourself, does this make sense? And you would pretty much get an answer to what you're looking for. Alternatively, right, I wrote a post on my website. The link is here. Okay, how much money can you make from forex trading? It can be applied to stock trading or whatever, right? If you can't find the article, just type this search box over here and you can find it. So basically, I break down this entire question into a formula that you can plug and play, right, to decide, how much can you potentially make from trading. Okay. And with that said, right, let's move on to this week's market analysis. So the first thing I want to talk about is a dollar yen. So dollar yen, okay, you can see that this market over here, right, what is it doing? So first and foremost, I always like to, take a step back, right? And one thing I noticed is that dollar yen has actually, broke down this area of support. Okay, it broke down, retest previous support turn resistance, and right now it's, heading down lower already. So you can see the price action. You can see that the market retraced, right, 1, 2, 3, 4 days, and then the 5th day it basically collapsed lower. And this small indecision candle over here. So now, how can you trade this setup towards the short side? So there are two ways you can do it. Number one, you can go short over here and have your stop loss, right, 1 ATR or above a buffer above this high, so somewhere here, right, in expectations that the market would continue trading lower. Or alternatively, if you want to have a tighter stop loss, right, what you can do is go down to the 4-hour time frame and notice the price action. You can see that this market, this is the same retracement you saw earlier, and the market is now heading lower, forming a series of lower highs and lower lows. So what you can do at this point is to trade the structure on this 4-hour time frame. So if the market were to consolidate, right, you can place a sell stop order or wait for the market to break below this low and you go short, right? And you can reference it from this structure on the 4-hour time frame, right? Set your stops a buffer above this high, so let's say somewhere here, and now you have a tighter stop loss over here. This will be your stop loss on this 4-hour time frame. And again, right, with expectations that the market could possibly continue trading lower. So this is, I would say, a trend continuation trading setup. How you want to trade a stop loss, right? A few ways. Some of you could, look to take profits, right, just below this low over here. Some of you could trail your stop loss. For example, you can trail it using I think the 20 period moving average, right? As the market hits lower, you can trail it using the 20 MA, right? Or whichever method that you want to trail your stop loss with, right? There's really no perfect right or wrong answer to it. So it really depends on your goal as a trader and then using the appropriate tools to meet your trading goals. Okay, so with that said, right, that's for dollar yen. I'm bearish on it, and those are two possible trading setups that you can look at this coming week. Another market, right, I think I mentioned last week that is still worth looking at again, right, it's Euro Aussie. So I mentioned last week, right, that I'm looking to go long on this because the market is at this hikes, at this resistance, and it's still hovering around here. So this to me is a sign of strength. So last week, if you traded this, right, I would say the opportunity came in, right, when the market break below this low, right over here, did a false break, and then it rallied higher. So really, this really boils down to your trade management, how you manage this trade. Because if you do not exit your trade right now, you can see that the market is starting to reverse against you. So just a suggestion for you, right? So one way to go about this is that when you look at a daily time frame, right, you are long and you're hoping that the market would break out of these highs. But before the market were to break out of these highs, what it can do is it can stay in the range, it can chop for a long time, or maybe even go back all the way to your entry before it finally break out. So how do you endure this, this emotional turmoil, if you want to call it? Okay, so an idea for you is to take a portion of your profits off, right, as the market move in your favor. So for example, this is an area of resistance. You can take something off the table over here, or when the market breaks and close below the prior candle low, you can take a portion of your position off, like let's say half. Okay, so once half is off, okay, you left a remaining half position on your trade. So whatever happens now on the remaining half, right, you are not too affected because you've already banked in some profits over here. So you can use this remaining half that you have and take a punt and see if the market can break out of this highs over here. So let's say it doesn't break out of the highs, it hits your stop loss, right? This is pretty much a break-even trade because you had some profit. I mean, it's close to break-even. I didn't really do the math, right? But you took some profits here, and let's say this market breaks down and hit your stops. Overall, positive and negative, they will cancel out each other, and it's close to a break-even trade. And if the market does breaks out higher, right, you know that you're in a very good trade location because you long near the lows over here. So this is a suggestion for those of you, right? I think I saw in the Facebook group, right, some of you actually traded this setup. The market may move in your favor, and this is something that you might want to consider, right? How to actually manage this trade. Okay, so I hope this helps, right? Anyway, Euro Aussie. Don't worry for those of you who who are not long, right, it's still, it's not still not too late, because if the market can break out higher, right, break above this highs, it's still a valid setup to go long, and you can, set your stops reference from this low 180R, right, somewhere over here. So no doubt the stop loss will be larger, but hey, there is still an opportunity for you to get on board this trade on Euro Aussie. And moving on, another market that I want to talk about is a non-agriculture market, is natural gas. So natural gas is actually similar to the Euro Aussie setup, just that it's the inverse. So again, look at the big picture, right? Natural gas, it's pretty much in a range, right? Very long-term range since 2016. Okay, so if you look at the price action of this, right, of this market, so notice, right, this is the area of support that I've highlighted over here. This area of support. So this area of support, right, or rather the market, the price action is telling me that the buyers are losing control, because if you look at it previously, every time the market came into this area of support, it left the area relatively quickly, right? It's telling you that there is strong buying pressure. That is why price didn't consolidate too long over here before it took off, right? So this one over here also is I would say it's relatively quick, right? It came in and then it pushed away higher. So at this point in time, right, it's still too early to tell, but from what I'm seeing, right, that there is a lack of buying pressure over here, right? Is that notice the range of the candles? It seems to be getting smaller and smaller. So you can see that this is the down move, right? And the up move over here seems relatively weak, right? The size of the wicks, the length of the range of the candle is relatively small. So this to me is a lack of buying pressure. So what I'm seeing, right, is that the market could potentially break below support. Okay, so what I'm looking for in this trade is for the market to break and close below this low before I go short, right? I won't go short just yet because I have no idea whether the support will hold or not. So for me, the entry trigger would be for the market to break and close below this low before I establish a short position in natural gas. And on top of it, right, natural gas, I believe the swaps, right, is very favorable for a short trade, right? If you're trading on CFDs and stuff like that, you may want to look at it with your broker. Okay, so natural gas is a market that I would say is also worth looking at, right? Market is in a range, tested support. The range of the candles is relatively weak, and we could see a potential breakdown towards the downside, but it's still still too early to say, and it's worth keeping a lookout on it. Okay, so with that said, I have come to the end of this week's market analysis, right? So let's do a quick recap to what we've discussed today. Number one, can you make 40% in less than 3 months? 3 months, right? Oh, sorry, this is wrong. This is should be this sign. Okay, in less than 3 months, right? I give you an answer to it, yes and no. Yes, you can do it, right? But you will not be able to do it consistently in the long run, right? 40% in less than 3 months, anybody can do it. Risk 10-20% a trade. You hit a 1 to 2 risk to reward, you're pretty much down there. But whether you can do it in the long run, which is the most important thing, is something that which I say is likely not, right? Because as I've shared with you, right, in 30 years you have almost $3 trillion, right? And you'll be the richest man in the world, but so far the richest man in the world is at 100 billion. Second thing we talk about is the dollar yen, right? I'm bearish on this. Then I talk about the Euro Aussie, I'm bullish. And last but not least, right, natural gas, I am bearish for now if the market can break and close below this low that we have mentioned. Okay, so with that said, right, I have come to the end of this week's market analysis. I hope you found it useful. If you do, right, please hit the subscribe button and the like button. I would appreciate it. And any feedback or comment, just let me know below and I'll get back to you. So with that said, I wish you good luck and good trading. And oh yeah, one thing, right, for those of you who want access to that article, the link is over here. You can just have a look at this page, the link, or just use the search tool on my website. Okay, so that's it. I'm signing off and I'll talk to you soon.